Right. Can we genuinely have a round of applause for the experience on the panel here? Gentlemen, thank you so much for joining in. We will definitely get it at the end. But your mics, please. Yes. Tamanna, why don't you start?
You know, I was looking back at the last time we had this duo, this, deadly combination of Manish Bhai and Ramesh Bhai together, and I think it's been a while. I'm sure you talk all the time, but in conversation on a stage like this, which is why I think we've been very excited about this double dhamaka that we have this Friday evening. But the fact is that for markets, they are only getting double hits. One day it's Trump, one day it's something else, poor results. You know, as veteran investors who've seen so many years of ups and downs, and I'm going to start with you, Manish, how do you look at the current period we're in?
Thanks, Tamanna. Rameshji and I haven't done a TV show together for a long time now. So thank you for bringing us back together. I always learn when I'm with him. And we were speaking, we were together last year in December at this famous Jaipur Jamboree. And the consensus in December for all of us from the markets was we hope it goes sideways for a year. Because we had run up too much, too fast. And you sometimes get indigestion. So actually we've had the best outcome, that the markets haven't blown up. I had a fear that we will become like a bubble market. And he used to talk about that K-pop top last year of when the Hyundai IPO had come as well. And as we speak, the market has collected 4 lakh crores on the LG Electronics IPO. So clearly this market is in a mood to go up. And to use a cricket parlance, you all are maybe used to the strike rate, that every year you should be making fast runs. But I think it's about longevity, that if we get the IRR going, and we have substantive money going and it keeps compounding, as long as the businesses compound, I think the rest will take care of itself. I don't know if you agree with that.
Thanks Manish. Thanks for your kind words. Thanks Tamanna. Thanks Neeraj. Thank you for hosting me today. I think what I suggested in November 24 when Trump was elected was that the world had changed on its axis. I think when Manish and I joined the market in the late 80s, we were entered a golden phase for the markets in the sense that 89, what happened was that, India liberalized. Berlin Wall fell. 92, India liberalized. 96, the tech boom started. One good event after the other kept us forward. What is happening now is that Trump is changing the way, the Washington consensus that was prevalent for the last 30 years, liberalize, privatize, deregulate, is now being changed into what I call the Mar-a-Lago mandate, which is basically each country for himself. So that requires different investment strategies and different thoughts. But having said that, I would take fierce exception to what Tamanna said. Markets are fine. I started when the index was 800. It's 80,000 now. It's 100x fold in 30 years. That's fabulous. I think this idea that market must go up 15% every year or 20% every year for it to be a good year is perhaps mistaken. I think you buy a great business and hold on to that, and being in the market will make you more money than trying to time the market.
Can I just come in on that? Yes, markets can't go up every year. The reason is why they aren't going up. Circumstances which are entirely out of our control depends on what someone posts overnight. And Ramesh, you called it. You were part of our, US election coverage. He was the one analyst who was sticking his neck out and saying, no, I don't think Trump is going to be great for global markets and Indian markets. I mean, you've been proven right. It's the reason of uncertainty more than the direction.
Yeah, Tamanna, that's not true. Actually, I thought the market would be in worse shape when Trump came into power. The market's in good shape, and I did a lot of self-introspection as to why the markets are in good shape. I mean, since July, the Liberation Day in America, there have been 30 new highs on the Dow, which is not something I expected for sure. But what has happened is the capital expenditure for the AI boom is masking a lot of problems and bad economic policies. The tariffs, for example, the Fed independence, for example, or, a host of other policies. There's such a massive boom going on in AI. Let me give you an example which might surprise you. Yesterday in the financial press, in India, the largest single FDI investment was announced. Do you know who announced it and how big it was? It was buried somewhere in page 6. I just happened to read it, so I know about it. Google is going to build a data center in Visakhapatnam The FDI for that is 80,000 crores. 80,000 crores, the largest single FDI investment in India. Think of what's happening in America, building data centers and building AI machines, machine language. That is masking a whole host of sins. So I would not like to give Trump credit for it. I think he's born lucky. As Manish says, give me lucky generals. So Napoleon wanted them, and Trump has been extraordinarily lucky. But I think bad economics is being trumped by good politics. You know, it's good in the short run to protect yourself, to focus on America. It's bad economics, and ultimately they will pay a price for it. But for right now, it's working for Trump.
Yeah, most certainly working for Trump. I wonder if it starts working for an average Indian investor. And, you know, Warren Buffett used to say, right, ovarian lottery, that if you are born in America, you were born in the right place at the right time for the next 10, 15, 20 years. To both of you, is an Indian investor right now a beneficiary of an ovarian lottery if she or he is in India? Is she or he at the right place at the right time?
So again, something we've spoken about, that the best way to think about it is, think if you were born in Europe right now, think if you were born in Japan right now, the best years of your country clearly are in the rearview mirror. What do you have to look ahead to as a youngster in those countries? I mean, there's great climate, great for us to go as tourists and all, but really, are you going to go and build a $100 billion business in those economies? It's very, very tough. Same way, look around our region. If instead of landing into Bharat, if you had just missed a little bit on the GPS, imagine where you would have been. You're just be grateful that we are here and grateful to be alive,
indeed.
Right? And the rate of change, like now in Mumbai, I can speak about, if you already had the Trans-Harbour Bridge, you had the coastal road, now you have the metro, you have the new airport. See the rate of change. So while we are not where we want to be, the way we are going there is, in a stock market parlance, when you go from bad to good, the rate of change is fantastic. But if someone is great and he's going to good, the rate of change is terrible. So the rate of change for anyone born in India right now is fantastic. And I would submit that today, if our market cap is give or take the same as one company called NVIDIA, what would you rather own for the next 20 years? Is it a capital goods stock, or is it this entire country which has 20, 30 years of growth ahead of itself, and clearly a profit potential?
Mr. Damani, a session with Mr. Chokhani suggested that 10% of the wealth is made. 90% of the wealth to be made in India is ahead of us. Do you subscribe to that? This is a great Diwali question.
I actually do. He's absolutely right, and he put it so well, so I can't do better than that. But, you know, Neeraj, I think, as I mentioned to you, that we live a life forward, but understand it backwards. I think if you go back now and look what a great opportunity India gave in '89, you know, such great businesses, globalization, privatization, and how much wealth was created thanks to those. So the question to ask is, someone standing in 2025, do they have the same opportunities I enjoyed in 1989? And I'll tell you, I asked this question to all the best investors you can think of. That someone asked them, what is the best decade to invest in India? Was it the liberalization decade? Was it the tech decade? Was it after Narendra Modi became Prime Minister? What was the best decade to invest in India? And uniformly they said, the best decade to invest in India is the next decade. Okay? Because the opportunities are so great ahead of us. So I completely am in agreement with him. I mean, it'll be a different set of opportunities. Don't get me wrong. I think we built our wealth perhaps from the tech boom. You know, may not that happen, maybe a domestic economy. So you'll have to slice the cat differently. But are the opportunities there? Would I recommend young investors invest in India today? Absolutely.
Well, we are asking, me and Tamanna are asking the question to the two best investors that we know. So I can safely say that. But Tamanna.
No, so I actually wanted to bring this down to what people who are watching you, and really there is a level of awe when people look at investors like Manish and Ramesh, and so many young investors want to build that kind of portfolio. They're listening to all of this talk of great opportunity, then they go back and open the app and they see their portfolio and the heart sinks a little. Let's be honest. Nifty year-to-date returns completely flat. मतलब सोना ही ले लेते हैं, FD में ही डाल देते हैं. that's also the feeling. So for the investor looking right now at what you're saying and the next decade of opportunity, what's the nuts and bolts of it looking like if you have to build a portfolio from scratch today? Ramesh bhai.
Yeah, you know, I can only say that the opportunities today, I mean, in the last 6 months, I've been on a travel Bharat Darshan. I must have visited 30, 40 companies across the length and breadth of this country. And I'm amazed at the level of opportunity and level of entrepreneurship that I'm finding in the country. And that is just not a spiel I'm giving. You know, I see countries, small companies running a bank, NBFC in North Indian, Ludhiana, barely in 2 states making already 100, 150 crores of profit. I go to a pharma company in Ahmedabad of all places, just getting started. I go to South to see a jewelry company. He's only in the state of Tamil Nadu with some 60 stores. He's already at 150 crores profit. What is he going to do when he gets to 2, 3 stores? And we know the opportunity is there for him. So, you know, this idea that you want to measure your returns every 6 months, every year, every quarter by the Nifty is perhaps a misleading idea. I think the more important thing is to hold it through a business cycle and see how you do. I think what I tell all the young kids who come to me and investors who come to me is that take an approach where you're trying to double your money every 3 years, okay? And if that happens, you're fine. Don't worry where the indices go. Maybe the indices double, maybe the indices go down. But you're looking at individual stocks. You don't have enough money to invest in the indice. Invest in individual company, invest business. I think businesses are giving more than those opportunities to find it. So I have actually no reason to be discouraged because, as you said, the market has underperformed for 6 months. So what? It can underperform another 6 months. I'll be fine with that. I really think that we should get over this mindset of that if it hasn't moved up in 6 months or 12 months, I'm poorer off. You're not poorer off. You're investing in a business that is going to prosper over the next 3, 5, 10 years. And you should remain invested in that. And returns in market are never linear. They're always, you know, staggered at the end.
The question is how to identify that next big opportunity. What is that mantra, Manish?
See, there's no mantra in investing. You buy everything bottom up. And when you see an opportunity, like today afternoon as I was driving here, someone sent me an offer where one of the anchor investors was not able to put the money and is like, can you remit the money by Monday? And it looks interesting. Now I'm on the show and I can't react back to him, but I'm already thinking about should I be doing it.
How much was the investment that was asked for?
That's beside the point. But see, limited point is there are plethora of opportunities, as he's rightly saying. And one thing which has happened over the last 5 years in particular is India used to be very, very concentrated. 8 or 9 companies were 25% of market cap. Then the next 11 or 12 were the next 25%. So in 20 companies, half of India market cap was covered. And then another 40, 45 would take you to the 75th percentile. So roughly 70, 75 companies had all of India's market cap. Now this has spread out so widely that you'll be hard pressed to not find companies making this 150, 200, 300 crores of profit. And intellectually, as he's rightly saying, where did the big money come in India? If you think back to the 90s, anyone who took share away from the public sector was a natural winner because competition was so low. Anyone who could go international, whether it was IT or pharma, and make a dent in that market, even if you were 3% of a global market, you became very, very large. You got the tailwind of this whole BRICS in the 2000-2010 period. And as I always say, every decade we alternate from tech to hard assets. So all the Reliances and the Vedantas and all did very well in that decade. The last decade in particular, I would argue that people organized the unorganized sector in India. Is very famously DMart or even Titan for that matter. I would really say the real blowout has happened in this period. Trent, a lot of examples like that. Today even Zomato is basically organizing the unorganized sector. And the trend of taking away share from the government still continues. When you land at an Adani airport or you take your phone call on a Jio, you're basically doing what the government was doing many years ago. So the TAM for these segments is very, very large, and the companies tend to become larger than you can imagine when you're starting out. And the mantra which I was taught by my guru Nimish Bhai was, whatever the market cap you're buying at today, can you imagine that this company can make this profit someday in the future? It may take 10 years, it may take 15 years, but if you can't imagine, don't go in. You're not trying to make 20, 30, 40, 50%. If it's a 50, 100x opportunity, that's when you want to go and size up. And by grace of God, you need 4 or 5 like that in your life. And we've got 3 or 4 like that in our life, and therefore we are on the stage. The others got some better, therefore they don't come on the stage. So we'll get the last 1 or 2, and then,
then you stop
then we are
coming.
gone
No,
as well.
That won't work. That won't work.
But his point is absolutely right, that the scale of opportunity here is indeed very large. And to flesh out what he was alluding to earlier, when I say 90% of your wealth lies ahead of you, I just want to point out Warren Buffett's wealth at the age of 56 was $1.5 billion. Just let that sink in. The man is worth, 200 plus today.
He's just getting started, as he said, in 56.
And just for people feeling that it's very hard to sit on cash, he's sitting on $350 billion of cash in a market which is adding India's market cap every week, I think, the rate at which they're going. So patience, longevity, it's again in the cricket parlance, you want to make 10,000 runs and be a Tendulkar. You don't want to have a strike rate of 250, but only play 2 IPL seasons. So, like he says, time in the market, longevity, and playing with the right technique. As long as you don't lose your wicket, you're going to make money in this country. So don't do anything silly, don't blow yourself up, don't take leverage, you don't need to do derivatives. Just find the right business, find the right person running it, and just sit tight.
Wow. Well, okay, celebrating the goddess of wealth this time, right? It's also a time to do that. A lot of it is also about the mental model, right? And how do you behave when there is 12-month, 80-month, 24-month of no returns or low returns, or maybe lower returns relative to other asset classes. I mean, people would have seen, the famous meme that is going around, कि कुछ भी कर लो बनी, तुम्हारा portfolio मेरे gold के portfolio को underperform ही करेगा, right? That's the famous meme that is going around. So Ramesh ji, what is the mental model that you have when you go through a period of underperformance? I remember a show that we did wherein you said famously that why I regret not being a billionaire, right? What is the mental model that you go through a period of underperformance that people should take heart from?
Sure, Neil. Let me first answer your question of people who are very bullish on gold and,
Sure.
bemoaning the fact that they have gold and you have equity out there. The long-term track record for gold is 3% per annum. If you go back 150 years of gold history, so you're not doing anything great by buying gold. If you're a trader, you got it right, hats off to you. But generally, it delivers poorer, inferior returns to equity over long periods of time. So I'm perfectly fine being in equity. I don't really bother, the means don't bother me. Having said that, I think in 89, it required a particular mindset. I think 2025 required a different mindset for us. How do I explain this? In 1980s, when Japan was very powerful, they had something called MITI, which is the Ministry of International Trade and Infrastructure. And they would direct Japanese corporations, move into cars, move into consumer electronics, and they were all powerful until they realized after a few years in the 2000s that the capital was being misallocated, okay? They didn't understand the way the industry was changing. Japan didn't come up with the iPad or with the Walkman or with the iPhone. They're powerhouse in electronics, and yet they didn't do that. Because state can't direct capitalism. That's just the markets direct capitalism west. What we're happening now is a complete swing of the pendulum. Trump is again directing capitalism in America of all places. Invest in critical minerals, take a stake in Intel, do all these things that India has realized doesn't work because that's crony capitalism that we're doing. But unfortunately that's happening, whether we like it or not. So my job is first to profit from what's happening. So where is the Indian state directing its resources? It first directed a lot of PSUs. That was the leading edge of capex that took place in India. So a huge run into those things, which if you caught, you made a lot of money in there. I think the government will do 2 or 3 things, which I'll just share with your audience. So how the government capex will unfold in my view. One, of course, is the government has made a national priority to search for rare earths in India. So a lot of capex of government is going to there. So you find the government PSUs or private companies that are looking for rare earths. I think that is one thing to do. The other thing that seems increasingly obvious to me is the government has decided that India is going to be a shipbuilding power. We have a coastline, we have a young population who can be employed, we have the technology to do it. Why do we have 95% of ships made overseas? So I think shipbuilding will be a huge force for good. I think also there's a huge infrastructure push in this country. So something like Delhi, if you've been to Delhi, as I go there quite often, Delhi is a city that is being built horizontally. You know, there's lots of space in Delhi in the 50s. You had 2-story, 3-story bungalow. They can't do that. It's now one of the most crowded cities in the world. So from horizontal, you're going to go to vertical. And that means a huge opportunity for someone in land development, monetization, construction. So I think government expenditure will probably be focused, among other things, on these three areas also. So if you're asking me, what am I looking at? I think all those three segments represent opportunities for me. In the government sector, of course, I still like the pharma sector. I think some absolutely astounding companies doing intellectual work, owning some real intellectual property. So we're best on that. But we are broadly invested in a variety of companies. So we're fine.
Okay. Manish, you want to kind of just maybe briefly talk about this? I know your answer may differ with him on hard assets and gold.
Actually,
but what you look at as
for a change, because I never ever disagree with him, but I disagree on this very ardently.
You leave that to my wife. You know?
So the trend of markets has been ever since the US broke the Bretton Woods standard, because earlier you were pegged to the gold standard, and therefore the dollar was considered, you have to print $1 for every ounce of gold in Fort Knox. Ever since they debased, the value of dollar has actually collapsed. And while the 3% number he may be saying is right on a 150-year basis, from that 1970s to now, that's the magic period. And in that period, remember, the rupee was 4 to the dollar, and we had 90. So in rupee terms, the Indian housewife has been the smartest person to think that the value of what I'm buying is going down every year. Even in the period when it peaked in 1980 and did not perform for almost 20 years, in rupee terms, he was still making money on gold. So this institutional memory that our families have of be in gold and be in real estate was an inflation hedge in India. The additional inflation hedge you're now getting with Trump blowing up the US economy is the developed world is trying to inflate its way out of its debt problem. Japan is expecting, the average Japanese expects a 10% inflation rate in Japan,
wow,
which cannot even grow at 1 or 2%. So imagine how poor those people must be feeling. Like I have a friend who I went to business school with. He was the head of Bank of America. After he retires, he's still commuting in by metro and lives in the suburb of Tokyo and can't afford a big home. So that kind of wealth devastation which has happened in these countries, we haven't seen anything yet. And these guys are going to print their way out of trouble. We will be silly to keep accumulating reserves and thinking this dollar is worth something. I think the new world of China, Russia, Saudi have realized we don't want to hold dollars. And to the point he made on geopolitics, when Saudi says, I'm hiring Pakistan for the nuclear umbrella, is because they saw that America did not come to the help of Qatar or Iran or whoever. So that equation breaking down is leading to a lot of changes. And gold to me is it's not an equivalent of a stock. Gold is a currency. And if the BRICS had to settle amongst themselves, you're not going to trust getting a ruble or a yuan. But if the net settlement happens in gold, you'll be okay to do the trade. That's what these guys are going towards. And I'm not suggesting gold today. I mean, at 4,000, it's gone parabolic. And like our markets, it will have a consolidation phase. But this story is not over yet. This move away from tech to hard assets, which occurs every decade unfailingly, is very much on. To just draw back memory, in the 70s, you had the famous run in gold, silver, and oil, preceded by the then Nifty 50 of the US. Then it flipped over in the 80s, and you had a 12-time multiple expansion of the Japanese and the Taiwanese stock market, which was the era of, those were emerging markets then, and then they went down for 30 years. Then it flipped in the 90s back to NASDAQ, and you got the famous stop again for tech. 2000 to 2010, we came back to emerging markets and hard assets, and you know what happened to commodities in that period, and we were going crazy on infrastructure and Vedanta and Reliance and all of that in that period. Then they went nowhere for 10 years. The last decade was the decade of tech, and back to US, and indeed the rise of China. We did not even know Tencent and Alibaba and all existed. We used to pride ourselves on our tech companies, and look what happened across the border. And then they went to sleep. And this decade, the move already has happened towards the hard assets. China is nothing but a hard asset country. It is really the most powerful country in the world today, much as I hate to say it. The fact is, it is there, and it competes with US on an area of superiority now. When Trump tried to wave around his thing of tariffs. One day they shut the critical minerals, next day they stop buying his soya beans. And the guy is talking very, very politely to them. So the world has changed. And if this AI boom had not happened, this to me is the last sign of the mania. That if you're buying a capital goods stock at the peak of the cycle and the peak of the margins and giving it a $4.5 trillion market cap, there is serious money to be lost. They are 70% of global market cap. Are you telling me for the next 20 years, US will make 70% of the profits of the world? 10 companies are 25% of global market cap. This, I mean, I'm not that old, but I'm old enough to understand this doesn't last. This is like when you'll wake up, you'll look back and say it was obvious this is going to blow. And there's serious money to be lost. And to keep this party going, they print money. Every morning they wake up and the notes are printing. And it's foolish countries who are accumulating these and thinking these are reserves. Therefore, the smart money, the bigger central banks of the world are buying gold like there's no tomorrow. They're buying silver like there's no tomorrow. So it's gone to platinum, it's gone to uranium. We are only looking at gold because that's what you can trade or what you can see. But this move is for real. Our hard assets, when you put up a cement plant, when we came to the market, it cost 64 crores. Today it is at least 10 times that, if not more. You did nothing, you sat on your cement plant, you were worth 10x. By then you've repaid your loans because the value of the loan you have to repay also goes down in rupee terms. So this trade is here, it's for real.
No, so a couple of things from what you said. Do you think there's an AI bubble brewing globally? That NVIDIA is making no sense in where its valuations are. And did you get in on that trade?
Like he rightly said, I mean, $10 billion data center investment in India. Do you know what the capex spend of these guys is in US? The Mag 4 are putting $800 billion. How do you ever make a return on it? And the market cheers. Like we were even looking at Alibaba in China, they made an announcement that we will also spend money on data centers, and the stock rallied very hard. And people like us are scratching at because actually this data center is a rental business, and you would value it like a REIT because that's all you're going to make on it. The intellectual money is going to go to the guy who owns the AI, not to the fellow who sold you the chip or who's running the data center for you. So again, to cut long story short, you've seen Broadcom, what is the company, Nortel or Cisco, the way they peaked in 2000, those prices don't come back for like decades after that. So we'll see how this plays out.
Okay, so there is an AI bubble. Is there an IPO bubble brewing? I'm really curious to know because you mentioned briefly 4 lakh crore rupees in LG. I think if you add Tata Capital and whatever stock is about 4.6 lakh crore rupees. There was a data point that Ashish Chauhan shared with me during the session. I think some 73 filings took place on the 30th of September and counting. We did research that showed nearly 60% of listings in this year alone are lower than issue price or under 10%. Now, why are people putting money? Should you put money or should you just not?
So, I mean, there's intellectual argument. I was on the other side of the fence like maybe 15 years ago. The reality is, as an investor, whenever you participate in an auction, the benefit is going to go to the person who's selling, not to the person who's buying. That's just the nature of the business. And the fact is, if I look back to the period I was involved in, the late 2000s, the 3 or 4 largest deals of that period were Reliance Power, of course, famously, Coal India, Power Grid, and if I'm not mistaken, one of the Adani ports or power. 2 did very well, 2 did very badly. If you take this decade, now you've just had Bajaj Housing Finance, for example. This year they took 3 lakh crores and went. By no means is it a bad company. Zomato or Nykaa had come a few years earlier. By no means were they bad companies. But the market tends to get, like in every period, there's a wave of excitement around a certain theme, which attracts people to come out and say, let's list it because we're getting fantastic valuation for it. So nothing wrong with what the issuer is doing. You as a buyer, like I said, you have to buy bottom up what suits you. He mentioned a number of things. I don't have to participate in all of them, right? I can stay, if I know the capital markets business is still going to be a 10x from here. What's my rush? It may go sideways for a year. Let's just stay there. I don't need to go and find the next construction guy. I don't need to go and find the guy putting up rare earths, which I don't understand about, and what China will tweak. So I don't need to participate there. So this IPO FOMO or the market FOMO is something I would urge you to avoid. Having said that, as a participant, I'm very, very happy to see this kind of IPOs in India, because this goes into asset creation, which leads to capital formation and to profit creation. So as long as this is going on, it's fantastic. What pains me is, of course, when the foreigners sell and take the money out. But the good news is the Indian markets had kept the prices so high that we got good valuations when they sold. And now when they come back, they will have to pay even higher for that. And that will drive our markets even higher. So that's all I would submit on that.
Your view, Ramesh, on IPOs. Do you look at any of the issues coming at all, or how do you approach it?
I tell you two words that I always live by, Tamanna, is caveat emptor, that is buyer beware. That's my job, to evaluate the risk. I mean, I don't want to blame the IPO people or AI. My job is to evaluate it. That's what I do, risk evaluation. So, if I find it's overpriced, I don't buy it. Simple as that. I find enough attractive IPOs. I don't think AI is a bubble. I'll say it controversially. I don't think it's a bubble at this point.
You don't think AI is a bubble?
I don't think it's... No, not the AI as a business. AI as a valuation.
Valuations will come and go. It will be volatile out there. That I'm not making a call that you buy this one. But is it a bubble right now? Or is NVIDIA a safe example in a bubble valuation? I don't think it's in a bubble valuation right now. I mean, for whatever it's worth, that's my view. I have a company in America which went up 40% in a single day. Oracle. So it's just from $700 billion to $1 trillion of market cap. I have seen a lot of bubbles like Manish has. It doesn't seem to me like that it's going to be like the dot-com bubble and come back down. Maybe it'll happen in 3 months and we'll talk differently. But right now, as I speak to you, I don't see the stock prices or the industry in a bubble formation. What has happened is that it's gone up so much and there's so much excitement that people tend to think anything that goes up is a bubble. That's not true. There is something creative going on in those places out there. With IPOs, again, use your judgment. I mean, you mentioned a lot of IPOs. You didn't mention the IPO that Inam bought in the 90s, which made us all fortunes, which was Infosys. Even today it's up 3,000x or 4,000x. I forget how much it's up out there. So you get some great outstanding IPOs sometimes in the market. It's your ability to understand the business that's important. So what I would say is caveat emptor, buyer beware. Don't buy all the IPOs, but just because it's coming at now 80,000 level, which seems excessive, I would not ignore it either.
Wow. Well, this is the beauty of the markets. We got two legends. They differ on a couple of things, or maybe more, but that's the beauty, right? For every buyer, there is a seller and vice versa. Yeah. I would love to have maybe one thought from both of you around how you're riding the cycle and spotting the next big cycle. So, Rameshji, you famously played PSUs beautifully. In your current answer, you gave a couple of examples of PSU sectors as well. Do you believe there is an ongoing cycle in PSUs and people need to fish in that pond? People can do their own fishing, but maybe some guidance around where is it that you think cycles are underway which could last for 5-10 years?
Yeah. Typically, Neeraj, as I've often mentioned to you when you've interviewed me, is that every bull market has leadership. 90s, it was the cement stock. In 2000, it was the tech stock. In this time, it's clearly been PSU stocks that have led this bull market. So having said that, if I believe the PSU, if the bull market is still alive, as I believe so, then the PSU will continue to lead the rally. What I have done is I have moved it within the PSU basket itself. Taken money off the railways, put it into construction, taken money off something else, put it into rare earths. So, you can move the basket there. But I think because the new direction of governments, whether it's in America or whether it's in New Delhi, is to have government-controlled sectors dominating the economy. Trump is doing it in his own way with Intel and with Molycorp and all these things. So is the Indian government doing that. So they are directing almost the capital flows, excitement, revenues in those sectors. So I'm just participating with it. I'm not making a moral judgment, is this the right thing to do or wrong thing to do. I think the opportunity will be there, so I'm investing in those sectors out there. So I think, yes, there's still some good pickings and still some legs left on the PSU rally.
Okay, so cycle in PSU. Before I throw the floor to the audience, Manishji?
No, I agree with him on this. This is an area we've always agreed on. Back in the 2000s, which was the period of hard assets, and PSUs are a collective of hard assets, which as they get little more productive, or they get little fillip of growth, the rate of change is so fast that you make a great amount of money there. Also, it's playing, as he rightly said, because of the geopolitical mess, the amount of money and effort going towards defense and technology in particular is very, very large. also the rate of change in, say, the PSU banks, which I think we own some of them together, is very, very large. And the market is still scarred by memories of what happened 20 years ago. So it is a very happy hunting ground, I mean, long and short of that. And it plays into what I also believe top-down is a hard asset period. And my other favorite perennially is always, I understand the space better, is financials. You find the right guys in the right space, and I don't necessarily mean the most levered guy but like capital markets has been a perennial favorite. We know the space well, we know how large it can get, and it still has legs to run. There will be a couple of new listings coming there. To your point on IPOs, I would be very, very watchful of not missing out over there. Hopefully they come at decent prices. But there's enough to do, really.
As long as there's FOMO, I think FOMO is good.
Don't operate on FOMO. India has so many great companies. The ball keeps getting thrown at you every day. And the whole market doesn't need to come every day. Sometimes it'll be one sector, sometimes it'll be another sector. Sometimes it'll be one company in that sector. And we need to do 1 or 2 decisions a year. Actually, we don't work very hard. All we do, when you will come, you'll see us reading. And occasionally meeting people. Traveling to meet people to figure out what is going on. But actually, we don't really press the trigger very often.
He's right about that.
Yeah.
I mean, every day the market will throw a ball at you. You don't have to play anything. You just sit and watch it. Till you
It's
find
like
it
well
flat
left.
outside the off stump.
Yeah, well
you
left.
hit for a 6.
Talking about FOMO, I think the audience has a lot of FOMO because, Neeraj and I have been hogging the time of these veteran investors. I know Alex has a lineup of people who have questions to ask. Alex, be fair, not only our profit people.
No, in fact, I'm going to avoid asking the profit folks. I'm going to keep it open for people to ask. And since we're talking about cricket, the distilled wisdom of these gentlemen, they're talking about the fact that while a lot of things change, cricket is played in a certain way, baseball works in certain situations, but not always. So if you've got a question, please raise your hand and I'll come to you and you can keep your question short. Please, anybody start. Shall I start with you, sir? No? What about? Okay.
Sir, I am a proprietary investor and I am very lucky to be in the market for 48 years. So I started before the Sensex was born. But, yeah.
Born.
1977. But I have been quite fortunate and successful in my portfolio. What worries me is that I am not a technology guy. I am not connected to technology. Just before you, the guys are from Screener and artificial intelligence, they had a talk. So I was just thinking, away from the market, if everybody, the young age, the present generation, if everybody operates and works on AI and they think accordingly and they will be guided accordingly, then what will happen to the creativity of I think...
You're saying youngsters should be going more towards creating enterprises rather than markets?
If
No.
all youngsters use AI, he's referring to the conversation we had with Screener and Jarvis.
Sort of a utopian
AI,
idea. The whole world is running on AI. And nobody applies any mind or creativity. So,
I get it. Intellectual question. We'll cut to it quickly.
Yeah, sure.
That, and I'm sure he'll also add to it, that as a tool, if when you saw the rise of machinery coming into the farm, you would have said, what will mankind do if everyone is taken off the farm? Then you saw the machinery coming into the factories, and you thought, what will mankind do, and all the artisans will be out of work, and so on. You came to the age of the computer and the internet, and you thought, what will happen to the open outcry broker and so on. It helped our business to globalize, for example. And same way with AI, I think we will find new use cases. Like I have investments in the private space on, now for example, this metro has come up. There is a One Mumbai app. Someone has created it. There is a new business which is born. Someone has put up cameras. You all have cameras for security, but you have a human being looking at it. Now the AI is able to scan and see anything suspicious, whether he's cooking in a McDonald's, whether he's picking up stuff in his DMart store, or whether he's doing something suspicious in the metro. There are newer and newer use cases coming up. And that's the nature of human society, which is why AI as a business, I'm with him that it's not a bubble. The valuation that this kind of capex spend can go up to produce a return, that's what I'm arguing against. But as a business, I think it takes mankind into a future which is much better. than what it would have otherwise been. Like imagine your life without a cell phone. How do you call your driver? I don't remember how 30 years ago we got hold of our car when we left a hotel. So it becomes so embedded inside us that we don't even realize how technology is helping us.
So you used to drive your own car, I think. That is the way.
No. In Bombay, that's not an option.
Okay, maybe I'm just.
But
since it was
I just want to take that slot, if you give me a minute more to complete the point, that your related point on this is absolutely right, that we will not build our future if all our youngsters come to the stock market. And the fact of the matter is, even if I take promoter number 125 on the list of companies listed, his wealth is greater than that of the largest and most successful investor in the stock market. So the way to creating wealth is to build something or to be lucky enough to buy something which becomes very, very large, and you sit on it like a business owner for a long period of time. So from a stock market perspective, we've shared our wisdom. But from a real world example, what you really should be hoping our youngsters do is go and create these enterprises, which will then become, the new drivers for the economy. And serious wealth, money and societal good comes from creation of enterprise. We are just riding on the coattails of people who have created great generational wealth for themselves.